Welcome back. Well, as we speak, the Nifty has moved into the green yet again. Unsure how long we'll stay in there. But earlier today, when the SGX was suggesting more than a 100-point downtick, it clearly suggested that we could see a bit of a short covering bounce that'll play out because the global cues were fairly positive. And since its expiry date, it appears some of those call writers, they're getting stuck on the wrong side. And now we're moving higher. So let's see whether or not this can extend. But good to see some green on the screen. But let's focus on PSU banks. Well, we had Jake Kumar who just joined in. And in fact, he told us that he would be positive on some of those names. Remember, those stocks have seen a sharp correction post Hindenburg's report on the Adani Group stocks. Abhishek joins us to run us through the hit on the stocks as well as how do valuations pan out now. Abhishek?
Well, Nigel, as you mentioned, PSU banks have seen massive wealth destruction in last just 1 week on account of exposure to the Adani Group. So, stocks have declined anywhere between 6% to as high as 13% in last just 1 week. So, SBI is down about 9%, Bank of Baroda nearly about 13%, Canara Bank about 8.6%, PNB more than 7%, and Bank of India about 6.24%. So, we had brokerages who had written note on account of the exposure to Adani Group of various banks. CLSA has mentioned where does the debt sit was the headline of the report. They say that most banks have indicated that they have largely financed strong cash flow based entities in Adani Group. So ballpark exposure based on FY24 figures, private banks have about 0.3% of the loans and around 1.5% of their net worth, while PSU banks have about 0.7% of the loans and nearly about 6% of the net worth. Jeffries had also written a note on exposure of banks to Adani Group. They say that the consolidated debt of Adani Group is about 1.6 lakh crore or about 1.6 trillion rupees X of shareholder sub-debt. So debt to EBITDA is actually down if you see from FY16 level of 4.3%. It's now down to about 3.2x in FY22. So diversification of borrowing mix has actually cut the Indian bank exposure to the entity, which is now about 33% of the debt or about 0.5% of the sector loans. So they are watching for the progress, but they see limited or low risk for the banks. They say that debt to the group, that is Adani Group, forms about 0.5% to 0.7% for PSU banks and about 0.3% for the private lenders. Back to you.
Thank you very much for that, Abhishek. Just take a look at Dabur's Q3 numbers. It's